Good day, Junior Tickies. I'm Mrs. Brimacombe. We are going to look at Chapter 7, Activity 5. Question 5.1. Choose an explanation from column B that matches the term in column A. Write only the letter A to D next to the question number in the answer book. So if we look at question 5.1.1, King Code, that is number D. This sets out the ethical and effective leadership expected of companies. Question 5.1.2, the triple bottom line, refers to the impact of business activities on the profit as well as the effect on the environment and the social issues. So that is number A. Question 5.1.3, Social and Ethics Committee. This is number B. Monitor the company's social and economic development. And then question 5.1.4, Risk Committee, is number C. Monitor the whole risk management process, internal and external assurance providers. Question 5.2, Audit Report. Required, refer to the information below and answer the questions that follow. So we are going to look at question 1 up to question number 5. If you look at the information presented, it's an extract from the report of the independent auditors. Question 5.2.1, where, why, and when is the audit report expected to be presented? Take note of the different ways in which these questions is asked. So if we look at the where, it's at the annual general meeting. On the annual report to the shareholders are the owners of a company. On financial publications and newspapers, and on the internet. So these are all possibilities of where the audit report is expected to be represented or presented. If we look at why, inform the shareholders or potential investors about the performance or the progress of the company. If there is any compliance with the international financial reporting standards, transparency, public company financial statements need to be published. It's a requirement according to the Company Act. Independent or external auditors appointed by shareholders are answerable to them. If we look at the when, it happens at the end of the financial period, upon completion of the independent audit process, on the date of the AGM and thereafter. Is the audit report presented by PW auditors regarded as a qualified report, unqualified report, or a disclaimer of opinion? Give a reason. So if we look at the independent auditor's report, it says there, we have audited the annual financial statements of Apple Limited set out on pages 12 to 30 for the year ended 30 September 2020. These financial statements are the responsibility of the company's directors. Our responsibility is to express an opinion on these financial statements based on our audit. The audit opinion, in our opinion, except for the fuel and maintenance expense in the income statement which could not be verified, the financial statements fairly represent the financial position of the company at 30 September 2020. The basis of the opinion, the fuel and maintenance expense of $450,000 in the income statement could not be verified, as no documentation existed for part of this expenditure. So if we look at the audit opinion, this is a qualified report. Why? It has identified a concern and therefore it is qualified. Remember, qualified is sad. It's not good. Now, to give a reason, the audit opinion expresses an exception whereby it qualified the report regarding the shortcoming or exception in the case of the fuel and maintenance expense. The fuel and maintenance expense of 450,000 could not be verified. So those are the reasons for getting a qualified report. Question 5.2.3. Provide 2 points why the independent auditor makes reference to page 12 to 30 of the annual report. The financial statements are contained in those pages of the annual report. Other reports are also included in the annual report which were not prepared or expected by them. The auditors are responsible for a certain part of the report. Directors are responsible for parts of the report as prepared by them. Question 5.2.4. Explain the impact of this report on the company. So, what effect does a qualified report have on a company? So, if we look at the first bullet, prospective investors may no longer be interested in this company. Impact on demand for shares, the market price. Secondly, existing shareholders may want to sell their shares. Thirdly, it will ruin the reputation or image of the company. Fourth, this will reduce the value of shares on the JSE. Question 5.2.5. State possible consequences for the independent auditor if he had not mentioned the fuel and maintenance expense in this report. So if we look at the consequences, first, a disciplinary hearing, International Regulatory Board of Auditors. Remember the abbreviations and what it stands for. They could be arrested for fraud, deregistered or struck off the roll, suspended during the investigation. They could be fined, sued by the shareholders or held liable if they are found to be negligent, lose clients or be fired by clients because his integrity would be questioned. Auditors have an obligation to report anything which is misrepresented. Otherwise, there could be serious consequences. Thank you very much. I want to leave you with this quote. The secret of getting ahead is getting started. Next, we're going to look at activity 6.